Good afternoon, everyone. Welcome to the Festival of Enterprise COVID-19 webinar series. I'm David Stevenson, your host, and I'm joined this afternoon by Richard Bearman from the British Business Bank, who's the Managing Director of the British Business Bank. Richard, thank you very much for taking the time to join us this afternoon.
Afternoon.
Richard will be taking us through a presentation detailing the initiatives that are available right now from the British Business Bank and startup loans. And we'll be taking us through a presentation. And then after the presentation, we will open it up to questions from the audience. So with that, I will hand it over to Richard. Thank you.
Great. Thank you very much. Thank you. I've just been promoted, so I'm not the Managing Director of the British Business Bank, but Managing Director of the Startup Loan Scheme. But hopefully one day. Afternoon all. Hopefully we had a few problems with the slides, so the slides won't be as probably as professional as they should be, and I'm getting help with them because I can't show them on my own, share them on my own system here. So hopefully that won't put you off. So what I thought we'd do is just give you a run through of what we do, particularly focusing on the startup loans and the current sort of support services that are in place at the bank. And so clearly it's unusual times, but I think the first thing is I'll just give an explanation about myself, introduce myself, and explain the startup loan scheme, and particularly why we're trying to sort of make sure that is still promoted and hopefully publicised in events such as this. So it's Richard Bearman, so I'm Managing Director at the British Business Bank, and the British Business Bank is for anyone that's not aware, it's owned by the government. It's the government's economic development bank. And ultimately, there to deliver on behalf of the government, and very much focused as a bank to work in the SME space and to effectively make or help support making finance markets work better for the SME. That's our sort of day job in normal times. And clearly at the moment, with all the crises going on, is a portion of the government support to SMEs is being delivered through the British Business Bank, which I'll come on to in a moment. However, my sort of day job and the sort of core part of my role is looking after the startup loan scheme. So I don't know if you can just flip on to the next slide, please. And the startup loan scheme is a scheme that's set up. It was set up about 7 or 8 years ago, and it's, as it says there, it's there to support entrepreneurs, and it's a scheme that's there to deliver loans for businesses in their either starting up or in their first couple of years of trading. So for businesses that are up to 2 years old, and very much the design of that is to help people that have got those ideas, those concepts, or they've started a business and they're looking for that first phase of growth to get funding in to get the business up and running. It's an area that quite often is traditionally quite difficult to get funding from the main markets, and that's primarily what the British Business Bank is there for. So where there's a gap or where there's something that's not quite working as it could do or it should do, is to have funds or schemes available to support businesses, and that's what startup loans is there for. It's borrowing of £500 to £25,000. It's a fixed interest rate of 6% and can be taken over 1 to 5 years. However, what's probably I think more important than the funding is it's also about the support that's available. So the scheme is, yes, it's giving access to funds for those startup businesses, but it's also support. So the way we do this is we have a network of what we call delivery partners around the country. So over 20 organisations that are national, some of them are regional, some of the specialists, and they're all around the country. And what they do is they help go through the process of the credit application, but what they're also there for is to provide support to the business owner, both before getting the loan, so pre-loan support, to talk through around business plan, cash flow planning, talk about the idea, talk about what other things might be available out there, grants, that kind of thing. So a real business support. And what they also do is they work with the entrepreneur to build out the concept, the idea, so that the I can hear an echo, so let me just see if I can shut that down. Give me 1 second.
Okay. It's fine from my side.
I've just seen a message saying there's lots of echo. Is it
Yeah.
working okay for you?
I can't hear the echo personally. Does anyone else hear echo? It's possible that yeah, I think Gary, if you need to refresh your browser, if you could.
Okay, I'll keep going.
Yes, please.
Okay, so as I say, so the other part, as well as the funding, is support. So they're there to help people effectively get credit ready. So rather than just putting through a process that's a computer generated sort of system or a scorecard type process, they're there to actually talk to the applicant and really work with them to help build out that business plan, build out the concept, and to effectively help that business become successful, but also successful in getting the funding. What the scheme then also offers is, once we have the applicants have got successfully funded, we also offer, through those delivery partners, mentoring after the loan is delivered, so the mentors put in place. Now, the reason I was wanting to sort of talk around this is, clearly it's an unusual time, but I think actually it's really key that we keep promoting the fact that startup loans is absolutely open for business. Yes, perhaps the timing of when people want the funds might change. Clearly people will be thinking about when we get through this period, but there'll be a lot of people that have either got a business that's been going for 6, 12 months that are sitting there thinking about their next steps. And it's really important for me to make sure people appreciate that there's funding available, and you can start talking to us now about this, start getting the support, start talking to the delivery partners, so that when you do want that drawdown, when you do want to make the step, when we get through this period, or perhaps when you're preparing for the exit from the lockdown, or when you're looking for that next period of growth, that actually you know the funding's available to you. I think the other side to it is also that it's always a reality that in times of stress and turmoil and disturbance, people will come up with innovation. There will be people out there that either are thinking about their business and thinking about the big next step for their business, or there's people that perhaps are at home that are working in employment who are thinking about their ideas, and there'll be innovation, there'll be disruptive ideas and thoughts that are being worked on right now. And again, the reason for coming out and effectively promoting the scheme is to say there is support there that's provided effectively by the government for startup businesses to take those ideas and concepts to fruition. So it's a big reason for trying to be on the front foot. Yes, I know most people are thinking and worrying about the here and now and worrying about getting through this period of disruption, but it's also important to make sure people realize that there's support for that next step and the next stage. I wonder if you can just go on to the next slide, please. Just a few numbers on here, and I won't go through them all, but just to sort of give a sense of the scheme and what we're trying to achieve, because there's another part to it that I think is as important as, again, getting the funds out to businesses. It's also very important, and we're very proud as a scheme for the level of impact we're having. And it's something that we really have to try and focus on as a scheme, is that it's not just getting funds out, but it's getting funds out to rectify imbalances. So yes, we've delivered over 70,000 loans in the lifetime of the scheme, and that's, for me, it's a big figure, it's a big number, but it's just, it sounds slightly cheesy, but it's every one of those people is someone that's sort of following through on an ambition or a dream of theirs to be their own boss. But also it's the fact that 40% of the applicants, successful applicants, are women. We have a high success rate in supporting people that are currently, that pre getting the loan, were unemployed. And so the scheme is not just about delivering loans, it's also making sure we're righting imbalances. And that's an important factor. And that's something that those delivery partners are crucial for, because what they are is they're organisations that are out in local communities, in regions across the country, and they're able to give support that's relevant and timely to people, to hopefully, yes, help them become credit ready, as I mentioned earlier, but also have the confidence to follow their idea and to invest in themselves and invest in their business. I wonder if you can move on to the next slide, please. just got a couple of examples just of just two of the stories that I think are sort of just of interest and I think are relevant, just to sort of try and just to talk through the different types of businesses that we've got. It's an amazing business where it was really came out of sort of lack of support really for women that were pregnant and wanted to keep fit, and it was just a really nice story around an applicant that we were able to help and support, and it was one of those sort of businesses that where the idea came from personal circumstances, came from personal experience, and it was a why not, why isn't there something that can do this, one of those sort of great creative ideas, and from that we're able to fund that business and away it goes. Can you move on to the next slide, please? And another one, a gentleman in Northern Ireland, where he was actually, the actual origin of this story was again just one of those sort of fixing a problem, and it was watching his mother trying to sort of wrestle with it was actually a coal bunker that she was wrestling with, and effectively designed a sort of a much easier delivery system that can be used for coal, wood chips, grains, storage, all sorts of different things. So a hugely successful business now, but it all came from one point of watching his mother struggling to do something and realizing there's a better way of doing this. And again, Startup Loans was able to put some money in, and a really successful business has come out from the other side of it. So for me, the purpose of sort of speaking out is just to say that through this time, it's to make sure people realize that there is support available for people that are running small businesses, that are thinking about ideas right now, or are thinking about how do I grow on the other side of this current sort of the current crisis, or how do I support and develop the business, that there is funding available through the scheme. I'll just move on now and say a few words around the civil scheme, the COVID business interruption loan scheme, which is the sort of the major scheme the British Business Bank is running on behalf of the government. And I'm sure you've seen a lot about it in the press. I won't read through everything line by line, but I try to sort of call out the main elements of the scheme. But effectively, the scheme is picking up pace. The scheme is starting to be delivered in sort of exponential numbers through the banks, where they're starting to get ever larger numbers of approvals in place, and we will see the drawdowns continue at ever increasing numbers over the coming weeks. And just for those that aren't aware, what this scheme is designed for is the government is effectively providing guarantees to over 40 financial institutions, so high street banks, challenger banks, and other financial institutions. Provides guarantees to those organizations to help them provide support to businesses that have been impacted by the crisis. Now, these are loans. There's lots of other support the government is providing as well, but these are loans. So ultimately, they're loans that can be taken over up to 6 years, or they could be overdrafts or invoice finance or asset finance sort of borrowing. But they ultimately is borrowing of funds. But it's fundamentally where the bank might have previously been saying no, and it's how do we turn that no into a yes? How does the bank get comfort and support from the government to help them provide funding to put into the economy? Now, the businesses that can be supported by this, it's any business that turns over less than £45 million. And there's another sort of threshold, which is a £250,000 borrowing limit. So if you're looking to borrow less than £250,000, it's an important threshold, because below that, the banks won't take a personal guarantee. So there's no security implications below £250,000. Above £250,000, they can, at their discretion, talk to you about security, albeit not personal homes or anything like that. But they can talk about security above £250,000. Now, the scheme also is supported by the government in the sense that the government will pick up interest rate costs and fee costs for the first 12 months of that scheme. So again, to give that sort of comfort through the early stage, there's no sort of fees that are being imposed upon the businesses to help the businesses survive through this period. So in essence, it's a scheme that the government's there to try and provide access to capital for the smaller businesses that are running into difficulties. Fundamentally, the banks still did make the credit decision. I know there's been some press and PR about this, but the bank's still making a credit decision. But but what this scheme is trying to do is trying to help the bank make it easier for the bank to say yes, and ultimately it's around a viable business. If the business is viable, and the business was viable sort of going into this crisis, and can be perceived to be viable on the other side, and the only reason the business is going through difficulties is because of an interruption that's been caused by the current shutdown, then that's the sort of business that should be seeking advice, seeking support from the banks. But ultimately, it is the bank's decision to ultimately fund that business. And I'm going to flick onto the next page. I think there's one more before we take some questions. So there's just a few things there that how do you find out information? I think one of the key issues here is getting information, getting the right information, and trying to help people navigate through, what CBILS is, how it works, and what other government support there might be. So if you go to the British Bank's website, which is www.britishbusinessbank.co.uk, you can find all the information in there, but also links to the wider support that the government provides. So there's lots of other supports. You can find links there, and from there, updates onto when those schemes are going to be available. I think an important point, because it was quite it's highly debated, but that second one is an important point, which is a change to the scheme that was made last week, which is the lenders will not take personal guarantees for any facilities below £250,000. There are also relatively few restrictions on who can access the scheme, and there's a list there of who it's open to. But if it's something that you're interested in, you ultimately have to. The next step is to approach one of the accredited lenders. Again, the full list of there's more than 40. There's going to be more added constantly, but there's a full list on the bank's website. I would start off with your own bank, so approach your own bank. They're the best route, but you can of course approach some of the others as well. So I thought there'd be quite a few questions, and I can see some coming in on the scroll there. So I think perhaps what I'll do is I'll stop there, perhaps, and then perhaps take questions and see where that takes us. But hopefully that gives you a sense of startup loans, where we are with that, and a quick overview of CBIL, the CBIL scheme, which we can go on to, no doubt, in the questions.
Richard, that's very kind. Thank you. That was very helpful. Yes, I'm sure there will be a lot of questions. So let's see where we are with those. Sorry, I've been on the other screen. So we have a question here from John. Through the CBILS offering, what protects the bank's government from people taking a loan and then folding the company? And if the government have reduced the legal liability on company directors, can this be open to abuse?
Well, any form of lending is ultimately open to abuse, and it's one of the pitfalls of ultimately providing funds to businesses, and it's why that I guess also that ultimately the banks have to have the ability to say no. So they'll be doing their assessment process to assess the viability of the individual. They'll be looking into all the things that they normally look at to avoid exactly this sort of problem, because any business could, if it was malicious or could try and manipulate the system. So there is a risk there, and I guess ultimately it's a risk that the government is willing to take, and they've taken a risk-based decision that it's worth taking on a degree of risk, and they're accepting there will be some losses through this guarantee, but it's also right that the government supports small businesses and gets this support out there to effectively to provide guarantees to the bank, to allow the guarantees to be used by the bank to give the funding to businesses that need it. It's worth pointing out though, the business is still liable for the debt. So while there isn't a personal guarantee, if it's a limited company, the limited company is still liable for that debt. So that's still there. The business is still involved very much in the debt. So it's not a complete free pass for the business.
Indeed. So if you were to declare bankruptcy, then that would obviously have implications in the future for your ability to get further credit. So something to consider, everyone. We have a question here from Himanshu asking about CBILS, saying, do you have to have a premises for business to be approved for a loan?
No, it's not. No, absolutely not. No, not at all. So say, so if the amount of money you need is less than £250,000, there's no security conversations at all, so not even a personal guarantee. If it's above £250,000, the financial institution can, they're allowed to sort of talk about what assets are available for them to take a charge over potentially, and they can talk about personal guarantees as well. But in neither of those situations is having a premise an absolute sort of prerequisite of getting access to the scheme.
Right.
I think it's one of the challenges of the scheme, and I think it's worth saying that there's over 40 different financial institutions involved, and while the scheme has some set parameters and some set guidelines and some rules, each of those institutions do things in a different way, and I think that does cause some of the frustration that a certain institution will perhaps only lend in a sense. So some will only be able to do an overdraft and a loan and won't be able to do invoice finance. So the products they can provide under the scheme will differ. And equally, their own sort of borrowing requirements will change under the scheme. And while clearly we want that scheme to go as low down into the smaller businesses as possible, some of the organisations, they don't support businesses of a certain size. So there is variances in the financial institutions, but it's important that they are allowed to put their own lending criteria and processes over the scheme, but that the scheme is, as I say, designed to help them ultimately turn a no into a yes.
Excellent. Okay, we have thank you for that. We have a question specifically related to startup loans from Oz. I have several clients in the hospitality sector, and they want to apply for a startup loan to improve their businesses' appearances, fixtures, and fittings. As they have time now that they have a lull in business. Are they eligible for a startup loan, providing the businesses are operating for less than 2 years?
Absolutely. I mean, that's the easy answer is yes. The 2-year threshold is one of the thresholds for the startup loan company, but we're there right now trying to encourage. It's difficult to set the tone right. It's not about encouraging people to borrow money that they can't afford or they don't necessarily need. But I think it's a great example. It's sort of using the time efficiently so that you're ready on the other side of this crisis to maximise the opportunity. Because I am an eternal optimist, but as difficult as it is now, for many sectors, that there should be a return to at the very least good times, and I'm pretty confident for certain sectors there'll be a boom period after this. I can't see that the British public aren't going to want to go out once they're having been locked down. So restaurants, hotels, leisure industry, maybe boom's too strong a word, but I can't see how there won't be a bounce. Now that's not a formal view, but for that hotel, it makes sense to potentially do some work that you couldn't do in the normal times, and if we can help by providing funding, then we'd love to do that.
Excellent. So that I think was a good question. So the loans really are for startups. They're not just for pre-startup ideas, but if you have a startup currently, so less than 2 years, you're eligible. So
if it's less than 2 years, so it's a good question about when to apply. So fundamentally, sort of one of the two keys around it is there has to be sort of a bank account and a sort of an entity. But we will fund businesses right at that very, very early stage, almost sort of inception. What's key for us is can we get comfortable with the applicant that there's going to be a business there that's going to generate cash that's going to meet the repayments. Now we do repayment holidays for the up to 12 months. So capital doesn't have to be repaid for up to 12 months of the loan. So that really takes the pressure off. But we have to make sure that the business ultimately is viable. And if there's a good business plan and there's a good idea there, then we can fund right from inception. And I think it's important because that's the role of those business advisors. They'll talk to the applicant about the business, get to understand it, and make sure they can understand that there's a business there and potentially help evolve that business plan. And it's why it takes a little bit longer to do, because we've got humans talking to other people about the business to get to understand it. Because for startup there is more risk, but if you take the time to understand it, you can then spot those ones that really are likely to succeed and support them.
Excellent. Thank you for that. We have another question here about Sybil's, wondering how long the authorization will take once the preferred bank has taken the application. I'm not sure that's something you can speak to. Obviously, that's an individual bank specific question.
Yeah, it is difficult. So I think, I know that from press there's been sort of comment about sort of delays and the time it's taken. And I'm also not going to flippantly say people need, it's not about being patient. It's absolutely right that this has to be done as quickly as possible. My only assurance is that I know that all the financial institutions are, they want to get the funding out. They want to support their customers and potentially new customers through this crisis. And they are putting in place as quick as they can different systems and processes to allow them to deal with what is a huge volume of demand. But every day, from what I'm hearing, more and more are getting approved, and those organisations are getting themselves into a different form of structure and organisation so they can cope with that volume. That they do all have different processes and slightly different systems, so the timelines will vary. But my only assurance is that they want and need this to work as much as everybody else, and that they're absolutely doing their utmost to get it working. And they're having to work from home and put in different processes, which is adding, no doubt, a little bit to the delays in these early days. But it without doubt is getting better day by day.
Yes, I mean, I'm hearing that, obviously these banks all have, call centers, many of which are outsourced to other countries, which are also in lockdown. So they're facing unusual business conditions as well. I mean, I did have another webinar this morning with an accountant who had been speaking to a bank that had 150, typically had 150 applications in a year, but had received 1,500 in the course of a couple of weeks. So obviously that increase in volume is going to, slow the process down. So I'm sure that we will see an uptick in activity. It's only been a few weeks, obviously. So it's, I suppose everyone needs to be patient as well.
Well, it's difficult because if the business is running out, if you're running a business and it's running out of cash, it's hard, it's tough, and I totally appreciate that. But as I say, my assurance around this is, it is definitely getting better day by day as everybody is putting in place their systems and processes to make this as efficient as possible. Thus far it's been hard work for them, but it is getting better day by day.
Excellent, thank you for that. We have a question here from Phil, and equally Graham has the same question. They both received startup loans about 6 months ago, and because of the current situation, they've been unable to go ahead with their soft launch. And because they haven't launched, they're ineligible for a second startup loan or Sybil's, apparently. So wondering whether you have any potential advice in this situation?
So it depends on the particular circumstances. So we've been talking to our delivery partners who are, as I said, our partners that are out in the business community about how we support businesses, and there's definitely a few remedies. So the best advice is to speak to the delivery partner. If they haven't spoken to them for a while, we actually made some changes, or agreed some changes with our delivery partners just last week, particularly around second loans, which are effectively where someone's borrowed some money from us, we can lend to them a little bit more. So we've made some changes. So I think from the sound of those questions, we actually have moved our parameters enough that they'll be able to get support. So to speak to the delivery partners. The other option is where you've got borrowing in place already. We have our finance partners who ultimately manage the loan on our behalf. They're the regulated entity. And we've also sort of effectively endorsed their plan, their approach to provide real sort of sympathetic relief to businesses with their payments. So in terms of the actual payments of the existing loan, I absolutely encourage you to get in touch with the finance partner. There's two of them, so depend which one is your finance partner. But you can come through to us and we can help you with that. But in terms of new borrowing, our second loans, we've flexed the scheme quite considerably just last week, so that I think you'll be able to get extra support that way as well. So hopefully we have a solution for you there.
Excellent, thank you for that. Hopefully that addressed those questions, and that sounds like
not updated on the website yet. It's that hot off the press. But if you speak to the delivery partner, they were all updated last week, and they got confirmation of that just yesterday, I think it was.
Oh, great. So Graham and Phil and anyone else who is inquiring about this sort of thing, please do get back in touch. And it sounds like there is support there. So that is great. So we have another question here from Joseph, wondering about the interest rates on civils, how they're set, and whether they're capped. I don't know if that's something you can speak to. I assume that's an individual bank specific.
It is. It is individual bank specific, and it's a difficult one for me to speak on. The only assurance I can give on that one is the government and the Treasury have been very, very strong with all of the messages in the banks, that the banks have to effectively play fair by this scheme. And then I can only speak sort of personally from the organisations I've spoken to that are involved in it, and they're all coming at it with good intent. Now the rates that they charge should ultimately be commercial rates and be as close to sort of the rates that they would charge in normal circumstances. And that it's a difficult one to tell you what the average should be, because it would depend, because this scheme goes from borrowing from £10,000 all the way up to, well, less than 10,000, but let's say £10,000 all the way up to £5 million, and so the rates will vary massively. But as I say, there's been a lot of pressure from the Treasury, from ultimately the political folk that are backing this, to ensure that the banks are being fair and being effectively commercial with their decisions around that.
Yes, thank you for that. I think that ultimately, of course, they will have to do after the Civils interest payment holiday for the first 12 months. Or deferment or holiday, as it were, the rate will likely be a commercial rate afterwards.
Yeah.
Of course, it is still a loan. I have a question here, which is an interesting one. I'm not sure, again, whether it's something that you would be able to speak to. I think there's a bit of a gap here potentially for companies that have been functioning for less than 2 to 3 years and don't have the accounts to provide. So it is an interesting question. They have started a franchise. They employ 4 people. And they use technology to grow the business. They're wondering whether there's any help for people who've taken a plunge like this using the franchise model. And it's a very interesting question. I'm not sure whether you're able to speak to it, but I know that a lot of people have this question.
So the underlying sort of credit decision again, and I know it's sort of no doubt a bit frustrating because it's a similar answer, does come down to the bank concerned. And I would suggest go to your existing bank first, but you can shop around, and different banks do approach different sectors in different ways and have different expertise almost in different sectors. The broader point I would say is franchises tend to be quite positively received by banks, because franchises can usually provide, because of the nature of a franchise business, sort of evidence that of success rates, evidence, better evidence of potential cash flows based on obviously the previous experience of that franchise operator. So I used to work for a high street bank, and we had a specialist franchise team that was really kind of dedicated to supporting franchise businesses, and were I wouldn't say it wasn't a case of having a preferred sector, but it was definitely a sector that the bank really liked working with, because you could get much more comfort around cash flow. So if you look at sort of the situation we're in now, where people have got this cash flow, this business interruption, I would say that a franchise should be able to go to their bank and really justify their route out of this much more easily than a non-franchise business, because of that the support that the franchise gives you. Sorry, as you might have told, there's others in the house, and a child just crawled past me before being in the back shot. So I'm being slightly off put. Never mind.
Adds a bit of to the series.
So sorry, apologies. So yes, it's more difficult when you haven't published accounts, but hopefully you've got good management information. Franchises tend to record data much better, so you'll be able to prove what's been going through the business probably more easily than a non-franchise business. If that's the case, then actually that will give a good starting point for an application. And as I say, the franchisor should be able to give good evidence of the future trajectory of that business. So I definitely would see it as give it a go. It doesn't discount you by any stretch.
Okay, that's good. Thank you, Richard. And yes, I think there was a clarification that they actually want to franchise their business. So
Okay.
yeah, I think that you'd have to probably make a regular commercial application to the bank to get funding to do that.
And in maybe not now, because again, the banks are just completely focused on getting CBIL loans out, but they do have, as I say, they do have specialist franchise units, and what they are also good at, they're very useful for, is helping businesses to franchise. So apologies if I did misunderstood the question, but it might be difficult right now because they might be, as I say, bombed out with CBIL loans. But if when they have some more time, they can actually help explain how you could turn your business into a franchise. So again, approach your bank or shop around.
Excellent. That's good advice. So hopefully that is further clarification there, John. Thank you, and also thank you, Richard, for the answer. We have a question here. I'm afraid that some of the language is unclear, is foreign to me, but it's about partners in the CBIL scheme. They claim that Lily has spoken to a few of the companies listed as CBIL's partners. They said, however, they don't have the funding to support the CBILs, and they're only partners and do not supply businesses with the actual loans. So the loans have to be applied via the bank. Are you aware of this distinction between partners and the actual disbursement of or people who are?
So I think what we're talking about here. So we have accredited partners. There's people that are accredited to be CBIL providers. It's actually built on an old scheme that's been going for a long time called the Enterprise Finance Guarantee Scheme. So there's a scheme already out there that we had accredited partners for, and so there are organisations that we will add to that list constantly, who are accredited to provide the CBIL loans. Ultimately, they're providing their own funds, so that it's their funds they're lending out, and they get the guarantee from the bank to make it more attractive for them to as I say, to lend to businesses in this difficult time. So if we're talking about partners, I'm not sure, but perhaps I think what we do have is some of those organisations have partners that will effectively refer in or work with them to refer businesses in. So it might be that, but I'm not sure. The accredited organisations, they are lending their own funds to the applicants.
And there are 40 banks that are accredited. Is that correct?
Sorry,
there are 40.
There's over 40. I can't remember the latest number actually, because we've got lots of applications going through to add more organisations to that list, but more than 40 organisations, not just banks. There's lots of different financial institutions,
crowdfunding platforms, and sort of alternative lenders as well.
Asset finance.
Great. This is an interesting question. One, that I think a lot of people we don't have any clarity on, given that we don't have any understanding of how long the crisis will last for. People are wondering how to estimate how much money their business would need. And this is an interesting question.
It's a difficult question. I think it just has to be common sense. I think you have to use ultimately, you're the expert of your business. Use your judgment. I think the general the general sort of view is we've got 3 months of disruption, but the scheme is live for 6 months. So the CBIL scheme is already booked in effectively for a 6-month period. So the scheme is going to be available for 6 months, but it's also commented that if it's needed for longer, it will be extended. There's nothing to suggest that I'm aware of that if someone goes to get a CBIL loan, for example, and then this crisis goes on for longer, to stop them going back for a second loan. I've not seen anything to suggest that couldn't occur. I think you've just got to be realistic about the way through this crisis and plan for a period of time that you think that the business could cope for without the cash flow coming through. And then work through a kind of, okay, in common sense says we might have a period of X number of months that you feel is the right number to go for, and we move from there. The other support that the government's put in place seems to be on a month by month, and will just continue to roll on. Again, I've not seen any expiry dates on those, or if there are expiry dates, they tend to be quoted with and we will review on an ongoing basis. So nobody knows how long it's going to go on for at the moment, but everything I've seen suggests the support is just going to roll on until it's not required.
Excellent. Thank you for that. We have another question here, and it's I had a question about this as well. Sort of tied into this, whether there are charges for early repayment of a startup loan.
A startup loan? No, there's no early repayment of startup loan.
Great. And typically, how long does it take to get a startup loan? I think people may want to know the answer.
It's a good question. So, and I'm going to be slightly juiced, but say longer than normal, and that's by design. So longer than, if you're used to sort of maybe getting a personal loan from a personal loan supplier where it's straight through digital processing, you can get it in a day. It takes longer than that, but that's by design. And the reason is because of the human element in there. We have digital systems and we do use digital tools to help process them as efficiently as possible and to gather information. But everybody that go through an initial process, as long as someone isn't declined for effectively a policy reason, or there's something fundamental, it might be an industry we just cannot support, everyone gets assigned to a business advisor. And then it's a conversation, it's human to human talking about the business. Now that takes time. The quickest, it will be 3 or 4 day turnaround from registration through to the funds being available, so 3 or 4 days. We've got cases that have gone round and round on a number of applications, taking a couple of years to be provided. In most cases, it takes a few weeks, but it's by design. It's because someone is asking the applicant, okay, have you thought about this? Have you considered this? Talk to me about this. Talk to me about that. Explain how the cash flow works, and actually debating the business to help the business owner get in the position where they feel, actually, I am ready to borrow money. I have got my business. It is refined. I've thought it through, and away we go. So as I say, it's about helping someone get credit ready. And so the process is designed to take a little bit longer because there's more human interaction. If you could just click a button and get it, almost you wouldn't need startup loans because we're not filling the gap. The gap is there to help people get credit ready. So the quickest 3 or 4 days, the longest 2 years, everyone else somewhere between the two.
Fair enough. Good. We have Oz asking for some clarification on the 12-month payment holiday. What I was saying earlier is that the civils have no interest for the first 12 months. The government is going to be paying the interest. You were speaking to potentially interest holidays, is that correct, on startup loans in the
So there's 2 things. So our finance partners can provide capital interest repayment, effectively freezing repayments on existing loans. So we don't agree them through the bank because it's a regulated entity, and so they'll do that for us. But the finance partner who we work with, who ultimately manage the loans on our behalf, they will provide payment suspensions during this period. So that's for the existing loans. For a new loan, for someone that's sort of about to draw down or wants to sort of take a loan out with us, we can do 3, 6, 9 or 12-month capital repayment holidays. So for a new loan, in sort of effectively they won't pay any capital back for that period of time, and then once we come to the end of the period, the capital starts to get repaid.
Excellent, thank you. We have a question here from Georgios. I think this is probably one for your accountant, Georgios, but it does have a sort of grant element, so I might ask it nonetheless and see whether Richard can perhaps shed a bit of light. He's a director of a 20-year-old company. He's recently been granted a Horizon 2020 grant for a new project, wondering about how he can restructure to a new company for the project so that he doesn't lose the grant and take advantage of startup grants and tax incentives for new investors. That's not something I can speak to.
That's probably not one for me, and definitely not one in this forum. I think you need a lot more information to dig into that. So probably is speak to an accountant.
That's what I thought. I thought maybe right. Yeah. So thank you for that, Richard. Sorry, I didn't mean to. So good. Yes, I think. Well, I think you've answered most of these questions. So sorry if I missed anything, but that was an incredibly informative session, Richard. Thank you so much for joining us this afternoon. I think everyone's learned a lot. I think that if you do want to apply for a startup loan, the way to do that is to go to the Startup Loans website. Is that correct?
Yeah, that's right. You can come. There's lots of routes in. You either go through. If you put startup loans in, you'll get probably routed through to startup loan website, but you'll also find a lot of our delivery partners have their own website, and that's also another interesting route in, because they all have a slightly different approach in terms of their sort of remit. So we've got specialist delivery partners such as ex-forces who help people that come out of the forces, obviously, into running their own business, through to all sorts of different regional organizations that might know your region a little bit better. So you can have a look at different delivery partners as well, and they have their own website. But if in doubt, come to us, and then we'll put you out to the delivery partner that seems most suitable, and then hopefully get you on the road to growing or starting the business.
Wonderful. Or it was www.british-business-bank.co.uk.
It's just britishbusinessbank.co.uk.
Okay, yeah, great. One last question filtering in here through, which is an interesting one from Oz, wondering whether he can apply as a financial advisor for loans on behalf of his clients. Not directly, no. So we have lots of organizations, lots of people that will very much help their clients. So we have a lot of financial advisors definitely get involved and help. I think what's important though, it is the client that's borrowing the money. So it's important that we have that one-to-one sort of relationship with the client to make sure that, one, clearly they understand what they're doing and so on and so forth, but also they understand what the business plan is. So we find financial advisors will work in partnership with the client and help them build the business plan. But it's still important that we do have that one-to-one relationship with the client. Of course. Great. Well, lots of messages of thanks coming through. Obviously, we're incredibly appreciative of you giving us your time this afternoon and joining us. It's I've another call at one. I'm afraid that we probably run out of time for today, but it's been very, very helpful. So thank you very much, everyone, for joining us. And Richard, thank you for your time. Thank you very much. Thank you. Take care, everyone.